What is going on, TradingNet community? I hope you all are doing really well today. It's Nate here from Aerial Effects, and in this video, we have decided to do something that we've never done before, and it's to give you a sneak peek into our newest and most advanced Smart Money Supply and Demand course. So the reason for this is because a major problem that traders face is not understanding the individual components that make up the strategy that you're learning, but understanding how to tie everything together in a more systematic step-by-step fashion. And this was a big problem for me, especially when I first started trading as well. Now, I could identify imbalances in the market, see market structure from different time frames, and view liquidity purges at different times of the day. But what I lacked was the ability to put everything together to form a setup to see consistency throughout my trades every single day. So that is exactly what this video is designed to do, is to provide you with that all-encompassing full perspective into exactly how we trade from a step-by-step basis, so that you can understand how we go from a blank chart to a potential setup. Now, it is important to have an understanding of the fundamentals and the individual components that make up supply and demand in smart money, as this video will be quite advanced. However, we wanted to give you the opportunity today to see how exactly we break down the charts from a top-down perspective to give you an all-around view as to how we trade. We know that all of you are extremely busy, but we do highly recommend watching this video in its entirety to get the full rundown. So please do allocate time for the length of this video. And without further ado, let's
Fidel Crest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So one thing that really sets Fidel Crest apart is their no minimum trading days requirement on their challenge and verification stages. On top of that, traders who successfully pass the challenge and verification stages are eligible to receive a bonus payout of up to $30K on top of their funded stage profit split payout on performance. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more.
See in here that we had one push, an overall pullback, another push. So we would likely experience an overall pullback somewhere into this region of supply. And we can clearly see in here that we have that gap that needs to be filled right there at that particular price. So what we're going to do is we're going to call this 1.3850, that psychological level to fill in that gap. And that is exactly where we would like to probably take price short, right? So this is our last buying volume before the continuation. We can see this strong impulsive move to the downside, creating that huge imbalance on a higher time frame. This was our overall pullback because we did sweep a lot of liquidity. So we can see that that descending liquidity was swept. We had that buy to sell. This is really the low that generated this high. We can see we created a low. We failed to make a higher high and then the lower low. So now this becomes the new area of interest for us to look for shorts. And we can also see that we filled the imbalance as we came back up into it. That imbalance in lower time frame supply was filled with this after sweeping liquidity. So this would be a very good area to be looking for potential shorting opportunities. Not only is it a psychological level, we are trading in the overall direction, higher time frame short. And we're also looking at the lower time frame, the individual swing points in here to say there is imbalance with that previous supply. Here is imbalance here within this swing point. We swept that descending liquidity because we had 1, 2, 3, almost 4 touches of that liquidity of that trend line. So that creates buy side liquidity above it. And we can see we manipulated price higher to take it short. We repriced higher time frame and then we went short to continue with the overall trend of the market. So let's go over here to the right, and that's exactly where we will be looking to take price. So now in terms of scaling in, right, we want to be looking to scale into this position. However, remember what I said in the lower time frame trading video. We really want price to be breaking the previous structure before coming back up to the upside to then look for the counter trend breaks this way to have a higher probable chance of winning that trade, just because we are still technically counter trend bullish even if we're trading in here. So just because we broke the lower time frames doesn't necessarily mean we're going to go short. We have the opportunity to potentially push higher because remember, this is the high that generated this low. So we could come up higher, counter trend, to have a deeper pullback before continuing lower. So having that understanding, we can't really scale into this position yet because we really need that structure to be broken. Now, if we go to bar replay, and I'm just going to go here and we'll have to find price again because it brings me back to the beginning for some reason. But anyways, what we can do is if this would be a very, I wouldn't say risky opportunity, but this would be more of just an intraday type of play. If you wanted to take price short, I wouldn't be opposed to it. However, we have to have the understanding that we still are definitely counter trend bullish. However, we have reacted off of that higher time frame level. We have the previous high, the previous low, the previous high, the previous low. So this is technically lower time frame structure, and we failed to generate that higher high, and we made the lower low. So this area of supply wouldn't be a bad region of price to be looking for shorts for that 1, 2, 3 drive. So that's how we can scale into that. Now, if you had taken that shorting opportunity, I would not have said that that's a bad idea, because we did come up into that higher time frame objective. We failed to make a higher high, we made a lower low. And so a pullback into, continuations lower would be nice. Also, because if we are going to continue long, remember the S&D flip video and the higher time frame objective video that we went over in this course. Remember, we came into higher time frame structure, but we're lower time frame bearish. So if we are to continue long, where could that be? That would be at the previous swing point. We would just go to the higher time frame of the 4 hour, and we would probably classify, this is not a swing point, but this would be a general area that you could look for take profits, potentially even down into here, right? This is going to be that prior swing point that we'll need to come into, right? Because we made the high, we made the low, and we made the higher high. So let's look at the counter trend to see where supply flipped to demand. So we create a low, a high, there's supply in here, right? Low, a high, there's supply in here. Low, a high, there's supply in here, right? With that buy to sell. And we failed, well, we did make a lower low, but then we immediately broke structure back to the upside. So that would technically be your area for potential longs from that level. However, I wouldn't look to buy it here unless we had a lower time frame break of structure and accumulation back to the upside. So if we accumulated, broke counter trend structure to the upside, then I could potentially buy it, because technically we are still bullish within this counter trend uptrend that we're experiencing. But if we're shorting counter trend because we came into the higher time frame objective region, then that would be that level of interest that I would look to play off of. So let's just draw this out. So that is 1.3240. Let's make this even, psychological level. So let's scale back into this level. And we can see clearly that we created equal highs, relatively equal highs. So at 6 in the morning, 7 in the morning EST, so this is prime New York session open, couple more hours, and then the London session will be closing. We can be placing, one of two positions, one right here. So we would have gotten in right there, or you could have placed it right here, because if we scale in even further, we can see that these are relatively equal highs. And this is the prior day's New York, London, and Asian session right in here. So we can see that this wick, you see that wick right there? We took out London session lows from the prior day. So we attracted sellers lower time frame, came back up, attracted buyers, and then went short. So that's that type 2 manipulation that we learned about, the sell to buy to sell. That's the lower time frame. I just don't want to scale in any further because I don't want to lose track of price in here, because I am in bar replay. So we swept liquidity, and we had that last buying volume before we sold off. And where that last buying volume came into is this last buying volume in here prior to the mitigation of that higher time frame zone. So that's where we could possibly push into. So let's just say that we took 0.5% risk here and then 0.5% risk here. First stop loss is going to, or both stop losses, are going to go above that swing point to the left right there. Take profits. So how would we manage the trade? So first and foremost, obviously first take profit will be at this previous low for both of them, right? Second take profit could be at an area of interest, as we learned, that price could potentially reverse from us. So where could that be? So I highlighted this zone of interest here. That could be our secondary take profit. And our third take profit would be this last sell to buy before making the higher high, because technically in this time frame we still are bullish. However, we came into a higher time frame objective and we made, we broke structure lower time frame, so we could be looking to take intraday or intra-week shorting opportunities, not higher time frame shorts because we haven't broken structure yet. But we could be taking price at least down into here. So first take profit would be that previous swing low, and then this area of demand, and then our overall level of demand. This one's for a 1 to 6.6. This one's for a 1 to 13. Obviously divide each of those by 2 because we're using half risk, and that would be that particular trade there. So let's just get rid of all of these levels here. Just going to delete these just so we can clear up price. So that would be that first area of interest that we would look to take. Now what we can do is zoom out. So when price gets back down into this level here, right, we could potentially look for buying opportunities. Now this is more or less a hedge, right? So we're looking to hedge potentially. Why? Because we are lower time frame bearish, higher time frame bullish, high, low, but also higher time frame bearish. Remember, we created the overall lower low. This is just an overall pullback to make that lower high into that higher time frame level of interest to make another lower low potentially. So it could be a potential hedge. So what we want to do, and I'm just going to play out price to see what happens. Okay, so that's probably good enough for right now. Let's scale into a lower time frame, and we will notice that we are starting to accumulate around that level of interest. So what we can do is we can pull that VFI indicator for the price volume divergence just to see if price is diverging from volume. And we can see definitely it is. Price is continuing to fall, volume is continuing to rise. So we don't look for volume price divergence before price gets into it. We look for it afterwards. So after price has broken structure, right? We want to see lower lows, discrete lower lows, lower highs, and then the break of structure occurred right here. Right, so where is our most recent supply or demand level, right? Because we broke structure back to the upside, having reacted off of that higher time frame level of demand. We have volume price divergence here, so let's just get rid of all of this stuff. So where would that be? Well, we broke structure. Let's look at the previous last selling volume. So we came into supply right in here. We fell, made a lower low. Supply is right there. We failed to generate the lower low. We made the higher high. So that would be that scaled in position that we could be looking to take right in here. So how would we manage this trade? So if we get into this position, probably right in there, we'll probably end up going 3140 just because that is nearest psychological level, nearest that area of demand. Stop loss would go below the previous low right in here. First take profit would have to be right above the swing high, right? Above the previous swing high. So let's just see if we even come up into that in the first place. And in that case, oh, we just missed it. Let's keep going. There we go. Now we come up into it. So that would be our first take profit, right? Now we're forming equal highs. So now price has continued to push in to the upside, right? We have accumulated. This is area of demand, that supply flipped to demand. We have the scaled in lower time frame entry. And we can also see that this is sell side liquidity right in here that we came into. What time did that mitigate? This is Thursday, June 7th, 2018. So we're a couple years up behind, 9 a.m. Eastern Standard Time. So this particular day, we mitigated at New York session open, time and price. So now we're looking for continuations higher. We want to take our first take profit, move stop to break even once the high is taken out, which it just did to the T. So let's just go and see what happens next. So where would we want to place our secondary take profit? Well, considering that we came into this overall higher time frame level, where is the nearest level of supply that price could push up into before potentially reversing if this is actually going to be the high in the market and we actually reverse here? So where could price come into prior to going short, if it's going to go short? Well, we talked about how the inside supply, how that works. So we can just see this level of supply in here, right? We have a lot of imbalance, just straight selling volume in here. This is really the last sort of up close. And we have this region of inside supply. It's not very, wouldn't say it's quite discreet, to be honest, right? We kind of reacted from that level initially to the downside, right? We reacted from it here, and then we just blitzed right through it. So this level of supply and then this inside level of supply is where we look to take profit. So secondary positions could be taking profit around, let's just call it 1.340 or 1.3450. So anywhere in there would be a valid level to take partial profits, and then the overall take profit would be a previous high, right? So you could take it at 1.39, which would be above that high because we would likely to make a higher high if price is going to continue in this upwards trend. And look what else price came into here, right? We accumulated now lower time frame. This is the overall last selling volume before the up close. However, we have on a lower time frame counter trend, low, high, low, high, low, high, failed to make the lower low, higher high. So this is the lower time frame demand. So that could be a level in which you take a partial position. Now, remember what we talked about within the prior videos about lower time frame trading. We can be placing positions half risk at this particular level and then wait for confirmation. That's how we can lower time frame trade. So our first position could go there at half risk, stops below the low. Obviously, the overall take profit would be at probably 1.39, psychological level right above the previous swing high. And then we got in on an additional confirmation entry right in here. So now let's see if we can even come into our second take profit. I don't know if we're going to, because we ended up reversing back to the upside, and we can see here we came back down and hit break even. So we would have been out anyways, and then price would have come down into this level, and at that point probably would go break even. Well, actually, at this particular entry, you probably wouldn't go break even because this is more of a higher time frame zone. So in this specific example, since I think we did break to the downside, we may have lost that trade, but that's how you would go about hedging that. And in the sense, hedging is not, in this particular example, hedging is not we're buying and then selling. A hedge in this particular example is that we're getting into a position here, getting into a confirmation entry here. We came back up, hit first take profit. So that particular profit, those partials that we're taking would help mitigate a loss that would incur if we ended up losing this trade. Right? It's all a game of numbers at the end of the day. Right, so let's just see what happens. I think we probably do end up coming lower. And if that's the case, then we can confirm that we are actually going to go short if we make a lower low. So let's just kind of wait to see what price does. Obviously, stop loss is still down here. We can't move stop to break even on this trade yet. And I think that, we just came down and hit it. So in this case, we probably would have lost, meaning a net probably loss on this one. But at least, we're doing everything in our power to do what's right in the market by the concepts. And we already have the understanding that we came up into the higher time frame zone. So now we can delete all of this. And then having that understanding that we came into that higher time frame level and then broke structure to the downside, now we know that we're not going to come back above that high. So we should be looking for overall pullbacks to then short. Right? So that was a very good trade that we took. If that trade were to come up again, I would take it all day long. It just so happened to reverse. But what if it didn't? What if it actually went long? You know how much money we would have made off those trades? A lot. So I'm willing to lose 0.5% and 0.5%, so 1% total, to potentially win 10% on that trade if it had have worked out, right? But remember, we took partials, moved stop to break even, so we really didn't lose 1%. We probably lost a little over 0.5%, which is really not bad at all considering, right? So let's just, now we scale back out and let's look at an area where we could be looking to pull back into. Well, we can see we have a couple of regions. Well, we have this level of demand that we reacted from, failed to make that higher high, made the lower low. So that supply, or that demand to supply flip is what we're looking for. Also, if we come higher because we have imbalance in here and we also have relatively equal highs, whoops, that was a bad line. If we zoom in, we do have relatively equal highs here. So we could easily run those highs, come up into something in here and go short. So what I would look for probably in this instance is this last buying volume in here, but also since we just busted right through this level, just creating this huge imbalance, what we could also see is this inside supply level. So we can do that. I'll extend that over and let's just kind of play out price and see what happens. And if this takes too long, then I'll just get out of our replay and we'll just see at that point. But I would probably wait for more premium price, right? So up into here. Now what you could do, and I can see right now that we are coming up into this area of supply, right? So this is more of like a, let's just see if it works out, great. If not, we have higher time frame levels, right? This is a higher time frame level. These could be lower time frame levels, right? So this is just an intermediate level of supply. If we get a reaction to go short, then that could definitely occur. So we can see here, we took out that previous swing high. We kind of came up into the last buying volume. So we had that reaction from the level. So then we broke structure, closing below it. I would like to see price pull back into that level here. And if that loses, we're using good risk management as we go, guys, right? So we're completely fine. Now we would like to see an overall pullback if we do get this break. But if we don't, stops are above this high and we can continue to take this short. So let's just kind of play this out and see what happens. Okay, so we have made that lower low and this is good, right? Because we've made that lower low below this level. Now we can be looking for overall pullbacks, whether that be lower time frame, boom, 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 and just go like that, right? However, remember the higher time frame, guys. Remember the fact that we are bearish, zooming out, right? When in doubt, zoom out. So we have that level, lower low, lower high. if this is going to be a lower low, we have to naturally expect a lower high. So yes, this is the daily time frame, right? If you were looking at it from a 4-hour point of view, you could consider this higher time frame, right? It is a higher time frame trend. However, what if price went like that? Would that be a break of structure? No. Why not? Because we're overall bearish. This would just be an overall retracement to go short, because it would be a lower low, lower high, low, high, low, right? It's all just higher time frame plays. So when we have breaks of structure, lower time frame, while we're already in a bearish downtrend, we have to naturally expect that it's just an overall pullback instead of a full-on reversal. We wouldn't expect a reversal from this level because we're overall bearish. And we've broken the previous structure now. We've confirmed it with the lower low. So let's just see what happens, right? We have that level here. I favor these two levels, but let's just see. So we push up. Okay, so now we're starting to react from the level. How would we manage this position? Like, actually, let's just see if it plays out. Actually, no, that's a good question to ask. How would we manage it regardless of what happens? I think we probably end up going long. But anyways, how would we manage it? Well, if we get in from this level, then first take profit would obviously be that previous low. Stop loss would go above that high. Second take profit would probably be an area where price reverses from us, or at least has an overall pullback. And what do we know about lower and higher time frame structure, as we talked about in the market structure series course, or structure video within the course? We talked about how when we make a higher time frame break of structure, we can't just continue to bank on the lower time frame trend. Now, we can still trade with the trend until it breaks, of course, because it could easily just continue to go like this. And then finally, this could be the end of the trend, and now this would be the lower low, lower high, lower low that we could get. So obviously we don't know at the time, so we just have to keep trading with the trend, but having the expectation that, oh, we did come back down into that prior low, we could have an overall pullback, and that's exactly what happened here. So now we would like to take our secondary position here at 1.178, 1.179, 1.8 is probably a good level. Psychological level 1.18. All right, so that would be a 1 to 5 for our second take profit. And then because we could expect, if we do just continue like this, an overall retracement into our higher time frame levels to then short off. If we didn't take partials at that level because we were looking for, a negative 27 retracement, which really just doesn't mean much, then you would have gotten stopped out because your trade is valid for the lower time frame, but invalid for the higher time frame. You're trading within the range of it. So you're not at the extremes. So when you get an overall pullback, you would get stopped out, but still maintain the bearish structure of the market. So we can see how that works, right? So that's where we need to be managing the trade and taking profit. So let me just think, it probably will come higher just because of the nature of the reaction here, just to intuition really, but let's just see what happens. Yeah, okay, perfect. So that's exactly what happened. So we would have gotten stopped out here, no problem, 1% loss. Oh well, we move on. Let's keep going. Okay, cool. Ooh, okay, nice. So we've come into our first level. We haven't come into our second. We still have half risk and half risk here because we have two positions. We have to treat it like it's just one position, right? Because if price just were to just keep going long, we wouldn't want to lose 1 and 1%. We would just want to lose 1% total. So split it up. 1 divided by 2 is a half. So now what we can do is we can zoom in to the lower time frame and see where structure is. So we have a high, we have a low, we have another high, we have another low, we have another high, we made a lower low. So where's the previous buying volume? Well, it's right here. The last buying volume is there, that overall supply. But we can probably scale into this level right in here. And I would have taken it, if price was down in here, would have taken it right there off that level. So that would have been, let's just see, 1.32, let's just go 3205. I think 3200 is a little bit too low for that. So 305, that's a psychological level, or just a round figure. All right, so that's where we would have traded it from. Or that's where I personally would have traded it from. All right, so stop loss would be above the high, right? And then take profit, same sort of deal. We got in right here. Our first take profit would have been right at that level, and we got the entry. Let's see the high of that wick. See if we would have gotten in actually. 049. So we would not have gotten in there. If that was our entry, we would not have gotten the fill. So that's okay. Now our first take profit is not right there because we haven't come up into it yet. Let's see what happens. Did we come back up into it? See if we wick up into it there. Yeah, there we go. There's one. Did we get that fill? 3, 4, 6. Nope, not yet. There we go. Now we got the fill. Now let's see. So now take profit 1 is still essentially at the same level. Take profit 2. Well, let's look. Where could price potentially reverse from us? And I'm not saying we're going to see a reversal. It's just how can we best extrapolate the most money the safest way? And now we can clearly see that you would just look, if you're selling, you would look for where could you possibly buy? Now, I'm not looking to buy here, but that would be that sell to buy, that demand level at that level, 1.26. So I would have gone 1.26, near psychological level right there for our secondary take profit. All right, so let's just see what happens here. Play this out. I'll become a little higher, come a little higher. Don't hit stop because stop's above the high. Beautiful, look at that. Okay, so we hit take profit 1, stops move to break even, we continue. Now we're continuing to fall. Do we hit take profit 2? We do. Boom.
Folks, I'm excited to tell you about my new sponsor, Black Bull Markets. They are based here in New Zealand, and they're a New Zealand regulated broker who offers up to 500 to 1 leverage and over 26,000 tradable instruments. You can trade Forex, shares, commodities, indices, crypto, and they're an award-winning brokerage firm here in Asia Pacific with dedicated 24/7 client support and no minimum deposit. To trade with Black Bull Markets today, click the link in the description below or in the card above.
Thank you all so much for watching. For the full video, send us a message on IG, Telegram, or Discord so you can get the full scoop into the whole GBP Swiss franc breakdown. So guys, if you enjoyed this video, please consider giving it a thumbs up and let us know what you thought of it. We would love to know your feedback and have your opinion so that we can create more customizable content for your specific trading needs to give you the best value possible. So if you really resonated with this strategy and want to learn more, feel free to head over to our website, aerialeffectstrading.com, and book a free call with me. I would love to speak with you regarding how we can best assist you throughout your trading journey to see if you are the right fit for our program. So guys, take care, have a good rest of your day, and thank you.